Welcome to another video. Today we're going to be taking a look at our 3 best indicators to use for cryptocurrency analysis. These indicators will help you get ahead against the competition when you are trading cryptocurrencies. So let's get started. So first of all, we would like to know where we can get our indicators. Well, we've got a lot of different tabs on TradingView, and today we're going to be taking a look at the indicators. So the indicators is the button located just next to the time frames when you are using your computer. I already have some favorites here located, but you can also search for them online. I love to use the 3 SMA, which are the 3 moving averages, and then I usually like to look at 2 different moving averages. I love to use the 50 and the 200 moving average. The 50 moving average is this red line, and the 200 moving average is this purple line, and you can adjust them whatever way you would like. Just double click and press on the visibility. You can also see there that the middle one I have not put on because I used to use 50, 100 and 200, but the 100 gave me a lot of mixed signals, so I decided to take that away from my analysis. So now I'm only using the 50 and the 200 moving average. The basic strategy on this is whenever we cross the red line, we will go to the purple line. And whenever we cross the purple line, we will go to the red line. As you can see, it has worked perfectly if you were following this bull trend. Another cool thing about this strategy is that you can always long when you get to the red line. So let's take a look from 2018. This has worked perfectly. We took the trade from the purple line towards the red line. We traded it and it was all good. We made a decent profit. Then from above it, you can see that the price will usually go up, so you could be long all this way as well. When you touch it, you could also still go long and enjoy more profits. When you break through it, well, the next thing you can do is aim for the purple line, so you could short it from here to here, making you a decent amount of profit. Then, when you are back at the purple line, you can see that the prices are going to be retracing back to the red line. Once again, confirmed. And then the next thing you can do is, as soon as you are above the red line, which is the confidence indicator, the 50 moving average, you can just long it each and every time that you touch it. So we went right here, we longed it, we are waiting all the way above, and then we are longing it here once again. We can long it here once again, long it once again, and as soon as we definitely close below it, so lose it as support, you could close up all of your longs. Then you would wait for a retest of this red line. Retest confirmed right here, short it from this area back to the purple area. And this is just a plain and simple moving average strategy that I like to use on all my trades. And therefore is the moving average strategy my favorite strategy for making a profit in cryptocurrency trading. The next of my favorite moving averages is the MACD, the moving average convergence divergence. This moving average convergence divergence is known for, in my opinion, for being just slightly better than the RSI. This thing has proved me the bottom in 2018, 2019, and I have a good feeling that this will happen once again. Alright, this indicator works as follows. Whenever the red line or the orange line crosses the blue line, you will see a price action. So this time the blue line crossed the red line, indicating downwards momentum. You can also see it by the candlesticks right here. And whenever you cross above it, you will get bullish momentum. Well, when we take a look at 15th of January in 2018, you can see that we crossed bearish just right here, and from that point on we had a huge downturn. All the way until we positively crossed back above once again anywhere in February 2019, and you can see that in February 2019 this was also confirmed. And this is something that I like to use in confluence with the moving average strategy, and I like to do that because, as you can see, this has been a perfect confluence. So you can see that this is bottoming out. You can even see that this is starting to give you some positive momentum while also finding support on the moving average. So these two things together make a very strong buying momentum. So what you want to do whenever you cross bullish, which you could say is at this point, you can long it up until it crosses bearish again. I especially like this on the longer time frame, where you can just do a trade every few weeks and be majorly profitable and don't have to worry too much. As you can see, we could have longed it from the beginning to the end, and from the beginning to the end that would mean a profit of pretty much around, let me check where it ended right here, of around 200% without any leverage. And I know a lot of you are leverage traders, so you can count for yourself what that would mean for you. And then once again, this trend or this indicator has been showing us very good signals ever since. We've been seeing one of the biggest bearish downturns right here. Well, you could have already opened your short up, but the best thing to do is wait for a divergence. Just as we explained in the video with the RSI, this is also giving you major bearish momentum signals. What you could see right here was that price was still increasing while the MACD was decreasing. So at the first moment that this crossed bearish, you could have opened a short position and closed it whenever we were bullish again. Well, then this would not have been a perfect trade. However, opening it on this weekly candle and closing it at the first time that we tried to cross bullish would have given you about a 21% decrease or a 21% profit whenever you would have opened a short, giving you major momentum for the next few weeks. These are my first two favorite indicators, and besides that, it basically becomes a big part of a lot of my favorite entry signals. And I would not be giving you one for this, but I will give you a load for you to consider. So first of all, volume. Volume is something that I like to use in every single trade because volume can give you a very good view whether the bullish or bearish momentum is actually really strong, whether it actually has some sustained momentum or not. Volume is therefore one of the next favorites, and if I would have to choose one for place 3, then I would choose that one. The Bollinger Bands are also a very interesting indicator because this is showing you how tight the market is. The more tight the market is, the more heavier the breakout will be. And as you can see, the prices usually stay within these areas. And when you are above those areas, it is usually good when you open up a short or a long position. Just imagine you would have shorted 18th of October all the way towards the next time that you fell down below to January, and therefore you can go further. This is usually known as a indicator that gives you help on what's going to be happening. And as you can see, we are currently in a squeezing motion. And the more you squeeze the price, the more likely that this outcome will become pretty big. This indicator consists of two outer lines and one inside line. The yellow line is the inside line, and we are now almost touching the inside line. Besides that, we also have some other indicators, but we are not going to be going up in that at this moment. So for now, you would like to take a look at the 50 and 200 moving average, the moving average, convergence, divergence, the volume, and the Bollinger Bands. And if you have any question about these indicators and their strategies, make sure to leave them in the comment section down below, because I would love to make a video explaining the strategies once again to you. Thank you for watching, and I would love to see you in the next one.